Good afternoon, everyone. Good afternoon. Thank you for joining and welcome to Wright-Patt Credit Union's Friday Finances in Focus Live. I am Ivy Glover, your Community Development Specialist for the credit union and your host for this afternoon. I'll give just a few minutes to let a couple people hop on. Please feel free, if you're joining, to share this message with friends and family and coworkers. Today, we're going to be talking about a new and different approach to saving. It's building your now, soon, and later savings. So again, I'm just going to wait a few minutes to let some folks get on. Please feel free to share. And today we're talking about what's in your savings buckets, a new approach to saving, the topic of now, soon, and later savings. I'm actually going to take a moment to share this message myself on my personal phone, pull up a few notes, and I encourage you all to do the same. Here we go. And we'll get started in just a few minutes. As you're joining, I hope you are well on this Friday. Feel free to check in, comment in the chat section so we know where you're checking in from. What's your zip code? What area are you in? Are you in the Columbus area? Are you in the Dayton area? Let us know who's out there this afternoon. I'm actually just trying to pull this up myself here. We'll get started in about 2 minutes. I am excited about this topic. We've been digging in to this topic a little bit at the credit union, and so I'm excited to share this kind of different strategy to talking about your finances and savings, right? We're all, in different levels of the savings journey, but we all need savings, that's for sure. And so excited to share this perspective with you all on the now, soon, and later approach to saving. I am just trying to pull this up live on my end, on my other phone, and it's not wanting me to do that today. Here we go. So like I said, please share. If you are joining us just now, we're talking about today, now, soon, and later savings. And we are talking about building our savings buckets. Please know that everything I'm going to share this afternoon is for informational and educational purposes only. And that we are here to answer your questions one-on-one and seek professional insight if you are going to take any action on what I'm going to share today. But I will go ahead and get started. My name is Ivy, again, for those just joining, and I am a community development specialist at the credit union, a financial literacy and financial wellness certified counselor. And I'm also a mom and a person that's navigating this pandemic journey. And if you are like me, many of us have learned during this time how important having a reserve pot or having some type of savings reserve to pull from in the time of emergency, and just because how important that is. And as we navigate that, we wanted to take some time to share with you all some tips, whether you're building an emergency fund for the first time, or maybe you've had to deplete your emergency funds or deplete your savings as a result of this time, or maybe you've not done either and you just want some things to give a boost. It's just really important that we spend some time talking about saving. Like I said, it's become clear especially during the pandemic, that having a reserve pot and having something to pull from when you need it is critical, no matter where you are on your savings journey, no matter how much you make, and no matter who you are. There's been spikes in expenses and in some cases dips in income for many. And so a lot of times it could leave us wondering, what should we have? How much should we have? Where am I getting it? Where am I storing it? So for the next few minutes, I'm going to answer those 3 questions. What should I have? How much should I have? Well, I'm not going to really answer exactly how much you should have, but I am going to share with you kind of how to bucketize and then where you should be putting those savings. And the way we want to talk about it today is by sharing with you a new and a little different approach to thinking about your savings. And it's the now, soon, and later approach to saving. The now, soon, and later approach to saving says that you save based on when you're going to use the money. Are you going to use it now? Are you going to need it soon, or is it money that you're putting up for later? So it's a little bit different from the whole idea of needing 3 to 6 months of an emergency fund and then needing savings for, retirement. It goes a little bit differently than that, but ultimately it still builds the buckets the same. But the idea is that you're building buckets based on when you're going to use the money. So let me walk through each of the three. Your now savings. Your now reserve looks at money based on being able to sustain spikes in your expenses or dips in your income in the short term. So something maybe that happens within a 3-month period, like having to run to the store for an extra roll of toilet paper, or maybe unfortunately being quarantined and having to go through a couple of weeks where you're not working and maybe you're hourly, so you're not making any income. Your now savings is set to help you deal with short-term spikes in expenses or dips in income where you need to dip into some money to be able to sustain your must-pay bills. And what are your must-pay bills? Things like your utilities, your housing, your transportation, and your food. Things that keep you and your 4 walls protected. And so when we think about now savings, we're thinking about savings that keep our 4 walls protected, and we're thinking about savings that will help us sustain somewhere in the, 2 to 3 month standpoint, or at least several weeks if we should need to cover those expenses that are spiking or those incomes that may be dipping. Now, where do we place those now savings? Now savings should be easily accessible in something like a True Saver. If you're a Wright-Patt Credit Union member, it's our general savings account, our True Saver account. And maybe you can even store it in a money market, which is kind of like a savings account with a little bit of a boost to it. You've heard me sometimes call it a savings account on a little bit of steroids, right? But something that's liquid, meaning you can access it in 24 to 48 hours without any penalty, and that you can get to quickly. So just your general savings account is great for holding your now savings. How do you build now savings? You put a little bit in at a time. Calculate what your must-pay bills would look like for 1 month. So, those utilities, transportation, housing, and food expenses, what does that look like for 1 month at the bare minimum? And look at what that is for 1 month and just start to put away for 1 month at a time, and then build to 2 months and then 3 months. You can also use tools like an Easy Saver, which is like a coin collector for your debit card, your checking account, where it stores your extra change when you make purchases, just to save a little change. Every little coin adds up. And when it comes to your now savings, it's really about, again, those small things that help you to sustain to get over the hump. Now, your soon savings are savings for purchases and expenses that you will have soon, in the near future, in the next 6 to 12 months, or it could be things like a quarterly bill that you pay. It could be maintenance on your vehicle or your home. Maybe it's a vacation that you're taking, or maybe it's to pay for tuition and books for your student for the next semester. Soon savings are savings for expected expenses that are coming up, but that you haven't had to make purchase for yet. And so I like to think of your soon savings as really future spending, right? You know you're going to do it. You just haven't done it yet. And so it's considered your soon savings. You may sometimes also hear this called a sinking fund. Sometimes your soon savings would go into sinking funds. Pots of money, buckets of money that you're putting away that you know you're going to spend in the future. You just haven't spent it yet. And maybe you're putting away a portion of the cost over time to prepare for it. For me, some of my soon savings include taking care of my son who's in college, some of his ongoing tuition costs and school fees. I have a 2-year-old, so I have a 20-year-old in college and I have a 2-year-old. It's things like putting away money to make sure that anytime we have daycare or diaper or wipes or medical costs related to him and his little food allergies, that we have money put away for that. It's putting away for my quarterly trash bill. My trash bill only comes quarterly. However, I budget for it monthly, and I put that in my home soon savings pot. So like I said, soon savings, the key is that it's an expected expense that you're not paying for today. So how do you know what those are? You take a look at what's coming over the next few months, and you write it out, plan it out, think about how much you're going to need for that pot. And then after you've paid all your must-pay bills for the month, you start to allocate a little bit of money to take care of those soon savings, that future spending that you're going to do, so that, again, you don't have this big drop of of expense required to take care of the expense at one time, you can pay for it over time. The third area is your later savings. Later savings are just that. They're savings or resources that you are putting away to be used at a later time in the future. These are things like planning for retirement, your 401ks or employer contributions that you're making, other investments that you may be making, saving for large purchases. For some of you, it may be sending a child to college in the future, helping a child get married, getting married yourself. It could be making the purchase of a vehicle, outright without financing it. Maybe it's purchasing or upgrading a home. But it's those things that are going to happen in the long term that you're really looking at how you can save and strategically put money away for and plan for in the long term. That's your later bucket. Now, I want to back up real quick because I didn't say where to put your soon savings. Your soon savings should go in, again, a money market account is great for soon savings, especially if you're saving toward a certain goal like vacation or the purchase of something that you're going to allocate money for, accumulate money for over time. You can also use what are called secondary share or secondary savings accounts or even secondary checking accounts. Did you know at the credit union you can actually have more than one checking account, more than one savings account? It's true. I actually have 7 secondary accounts, meaning 7 sub savings accounts where I break out money for groceries, I break out money for my 20-year-old, I break out money for my 2-year-old, and it's all separated so that I can keep those buckets growing and access them when I need them. And so for your soon savings, it's good to use tools like that. When you get into your later savings, you can start to look at, again, employee contribution, employee benefit plans, individual retirement accounts, share certificates or CDs if you're in the bank world, and other type of long-term investment tools. But then also things like your money markets and places where you're storing the money over a period of time are good places to hold your later savings. So to recap, we need to be building savings. We know it. We don't always know how much or where to put it. This is just a new approach or a little bit different approach to thinking about your savings. It's thinking about savings for now. What am I going to need as a reserve to get me over the hump in the case of an emergency or unexpected situation to still sustain my household? My soon savings, what am I going to need in the near future, in the next, 6 to 12 months even, that I know that I'm going to have to spend money for, or maybe even the next 2 to 3 years, that I know that I'm going to have to spend money for in the future, that I can be putting money away for today. And then finally, later savings, my later bucket. What do I have in the far future that I could be putting away for, and what are the strategies to do it now? I encourage you all, if you don't have any saving strategy, to try this one out. Sometimes we get really caught up on, the exact amount and the numbers. So this is one way to get started on that. And if you have not started a saving strategy, start with the now first. What do I need in my now bucket? My utilities, transportation, housing, and food costs. What are they? Break them down. Understand what they look like for 1 year. 1 month, and then calculate them by 2 to 3 months to figure out what that pot can be. And if you feel comfortable with focus on one thing at one time, maybe you start to put away enough to cover your mortgage or your rent for 1 extra month. Or maybe it's to cover your, gas, an extra tank of gas. You can start small and just put up something, but building that habit of savings is one way to get you started. And what you'll find is you'll start with your now savings pot being covered, and then all of a sudden the pot will start to overflow to having extra resources to cover those soon and later savings as well. I hope that this tip has been valuable to you. If you have any questions on saving and resources that we have, feel free to visit us online at www.wpcu.coop. We actually have a wonderful education section now that talks about saving. We're going to be posting some information out there soon about this now, soon, and later savings approach and different resources to help you in that journey. We do have some webinars coming up where we're going to be talking about money management. We actually have a session starting next Tuesday, 6 sessions that cover everything from budgeting to saving, dealing with debt, credit, and planning for tomorrow. So our what we like to approach: spend, save, borrow, and plan. We're going to cover it all, and insurance. We're going to cover it all over the next 3 weeks. So if you're interested, visit the website as well, and go to our education page. There's an event calendar out there where you can get signed up. and we are here to help and you along your savings journey. I hope you all have a wonderful day. Please feel free to share this message. And thank you so much for watching. Have a happy Friday and a happy holiday weekend. Stay safe. If you are out, please stay covered up, masked up, sanitized, and don't spend too much money. All right. Have a great weekend, everybody.